Hey, welcome to the Homebuyer Seminar. And anybody who doesn't tell you the market's hot, I mean, we've been here talking for 10 minutes trying to get ready to launch this thing. And
That's
Patricia's
right.
phone's going off, and I'm talking about deals I'm doing, and Shannon's got deals he's doing. Welcome to the Homebuyer Seminar. I'm Bill Gross, along with my good friend and colleague,
Patricia Castillo.
and our good friend and lender,
Shannon the lender. How's it going, guys?
Whew. It's busy, man. I closed the deal last week. I got a deal closing Friday. I got one in escrow. I got another one ready for escrow for Monday. I got 6 new listings. Crazy.
It's busy. Yeah, I just opened an escrow myself. I'm probably going to open one tomorrow. I took a listing in Long Beach. So once I have the my listing agreement is signed, but I'm waiting for some more information before I actually put on the market. But it is going to be a really good investor project. So this is good for an investor, not so much for a first-time buyer. Does need a remodel. And there are some, we were just talking about trashing out homes and how we thought that for trashing out another listing that you have, Bill and Inglewood, it was going to be more expensive. But some of that cost has gone up, even for investors. It's something where they really have to sharpen their pencils, as you say, Bill, with getting their numbers crunched, because something as simple as removing trash becomes not so simple and it ends up being expensive. So if you're a buyer and you're thinking of looking at a probate property, maybe a pre-foreclosure, sometimes when tenants are evicted, the properties are left in distress. And so there's a lot of factors that come into what can contribute to that cost once you purchase it, to have it trashed out, have debris removed, furniture, personal items, toiletries, all that stuff. It ends up adding up. And so it can run you in the, couple of thousand, maybe at $5,000 or more.
I'll give you a tip as a listing agent, because I primarily work on the listing side. We always try to get the buyer to agree to take it as is and trash it out. And the reason is they'll almost always underestimate what the real cost is to get rid of stuff. It's gotten very expensive. It's very hard to get things donated. As much as I'd like to see things recycled, there's less and less opportunities to get things recycled. And so I've had listings where it costs $5,000, $8,000, $10,000. I have one right now, $10,000 to $12,000 to trash out. It's a lot of money. And if you don't know the cost, don't assume it. Get a quote. You can factor that in your offer if you want, but then you have to have the cash. And so if you're tight with a small down payment or limited down payment, now that's more cash you have to have a close. So these things are challenging to work through, but you don't want to make a mistake on the numbers.
Yeah. And when you're buying a fixer-upper, go ahead, Patricia.
No, I was just going to say that when you're looking at your numbers, the lender is only going to finance you what the appraisal comes back at. So they're not going to include the trash out cost on top of the price, according to what the property appraises for. So that's something that you would have to be prepared as a buyer. Let's say you're offering $710 and $10,000 you're estimating for the trash out, and the property's listed at maybe $699, $700. So you think, well, I'll just offer $10,000 more, get that financed by the lender, but I'm really going to get that as a credit for the seller, right? The $10,000 to use as a trash out fee. I mean, it could cost you more than that. And also the appraisal may not come in at the $710. And so then you would have to make that decision, right? How are you going to work that out? You have to be prepared for those negotiations.
Yep.
Yeah. And also too, speaking about the appraisal, if you are a first-time home buyer that's looking to buy a fixer, if you're going FHA or conventional, that's another thing you have to look out for, because they do look at safety and habitability. Is this property still safe for someone to just move in as it is? And, is it habitable, right? Does it have a stove? Does it, does everything work in the property? That's going to, again, make it those two words, safety and habitability. Now, I've had clients that they are handymen or have people that are handymen, and whatever the appraisal called out, they fixed, the chip paint in the front. They're the ones that fixed all the things that they called out. We did get it closed. So, it's not to say it's not possible, if you're going FHA or conventional, but definitely look at that and look, like Patricia says, put that in your numbers, because that's something as a lender, we don't initially have in our loan estimate, is all these fixes that need to be done. So,
right. you're not factoring in the cleaning service, the trash out service, and
No.
getting
No,
rid of
That's not in
furniture.
our loan estimate.
Yeah.
Well, unless it
So,
is
yeah, but
right
it's
up front. I'm sorry.
Go ahead. No, go ahead.
If up front somebody just, that's the plan, then you just have to account for that up front. Then you can account for it, right? I mean, it can be done.
Exactly.
It's just, you just got to plan ahead and figure it out. I think it was interesting. I just took a listing. Patricia saw the property and told me she thought it can go FHA. And I got a couple offers in that were FHA. And I asked both agents what they thought would it qualify or not. And of course, they're writing the offer, so they're going to say yes. So I said, okay, here's the deal though. You made that assessment. Unless there's something you call out, price it based on what you see, and anything comes out, that's going to be the buyer who's going to have to fix, because we're not going to fix stuff just because you're getting an FHA
That's
loan.
fair.
And so,
That's fair. I've been in that position before.
yeah.
That's fair.
No,
And
it's all
as your loan
negotiation.
officer, as your loan officer, they should tell you, hey, look, would this come up? This come up? I have a good relationship with an appraiser, and sometimes I'll even go to the property, take a video, and say, hey, what do you think about this? And he'll give me my honest answer. Hey, this is what we'll call out. This is what we won't, and we'll go from there. So definitely possible. Yeah.
I recently had a case where I had a 2-unit, and it was upstairs, downstairs. They both had water heaters. They want the lender requirement is always the water heater strapped. The upstairs water heater was kind of behind it was kind of like the way the house was designed. It was really hard to get a picture down below, but then I could see it. But for whatever reason, he didn't take a picture down below. But he put in his report that it was double. It has to be double strapped. So he said it was double strapped. But he only had a picture of the top strap. And let him go back and take a picture of the bottom strap. It was just, that's the business we're in. That if the lender's not going to finance the loan, then you're not going to close escrow. If the title's not going to clear title, you're not going to clear title. It's just the way it is.
I've been in a similar situation, and in order for them not to get charged that, I think it's a few $100 for them to go back out. I just want to go take the picture myself. Like, hey, just here you go. Just get it done. You know what I mean?
Yeah.
So that's another thing to be aware
of a strap and a water heater. Who's really going to take a water heater? I'm going to put a fake strap on it, or I'm going to Adobe Photoshop a strap?
You're going to AI the strap.
I could, I guess, but really, that's who I am. You're financing this $800,000, $2 million house, and you're worried that I would AI a second strap. There's one strap already you saw, but the second strap, yeah. This business is crazy, man. But now, this is my favorite section of this podcast. This is the Bill was right section. You may remember a few months ago.
That's how right you were.
Yeah, I'm going to tell you guys. A few months ago, not against you guys in general, a few months ago, there was a lot of politics about the interest rates. And there was an argument. Are rates high, low? It was a political football. And what I said was, regardless of political football, the facts are the underlying interest rates right now are too high, and they're going to have to come down. It's kind of like letting air out of a balloon. Air doesn't go in a balloon. It can only go out of a balloon. At some point, the economy is going to adjust to closer to where the economy should be. So we had this discussion, about 6 months ago when rates were 6.7, 6.5, and the other day, they went slightly below the Fannie Mae acceptance rate, below 6. Today closed at 6.0. And you can see over the last year, it's been straight down, about 1% total down. That's part of what's driving a lot of the interest in buying, because it costs less to buy a house. And that's the other thing, that there was a political football. Will rates really affect buyer demand? Of course it does. It's like lowering the price. Like lowering the price of cars or lowering the price of food. Of course, people buy more if you lower the price. So anyhow, I said this all along, that the fundamentals of the underlying inflation rate to the mortgage rate were historically too high, that spread. And it was about 1% high, and it's come down about 0.75% so far.
Yeah, and I think yesterday
the
rates were at 5.99, right? So they change every day, but
Yes.
they're either going to just be right above 6 or right below 6. But I have seen
today I quoted
lower 5s.
Yeah, FHA 740 FICO 5.125, 740 FICO for conventional.
Say it again. Say it again, slower and louder. Say it again. So what was the rate again?
740 FICO going FHA. You're at a 5.125. Yeah,
Awesome.
you're at a 5.125.
That's what buyers have been
740
waiting.
FICO on conventional 5.875. So,
I started this
the lowest.
business in 1986. March. And rates then had just come below, just like today they're at 6 or maybe slightly below. They came at and then went slightly below 10 to 9 something. Went from like 10.05 to 9.9. I worked at the time at the second largest savings loan at the time was Great Western Savings, later Great Western Bank. And the phones rang so much that the phone equipment at the bank lending center melted. That's how many phone calls they got nonstop because they didn't have people pick up the phone. And so people were just calling, I would say 24 hours a day, but pretty much until like 9, 10 o'clock, we were answering phone calls for people who wanted to refinance or buy a house. It was just insane. And here we are at flirting with 6, touch below 6. I think we still have a quarter of fat in those rates given where the economy is. Of course, things can change, but given where we are now, there's like another quarter of fat still. And I think so. Anybody here looking to buy a house, my prediction is unless things change, and things change all the time. So I don't want to make it sound like it's a prediction, but based on the fundamentals today, there's another quarter of fat in those rates.
Okay. Yeah, and then how long will you think it will be down?
It's inevitable. I mean, I again, things could change. You go to war, I don't know what's going to happen in Iran, China, there's a lot of things that can change and affect it. But if nothing changes, the rates are going to go down another 0.25% over the next 30, 60, 90 days because there's no reason for the rates to be that high given where inflation is. It just doesn't make sense historically. It's not political. I'm just saying the numbers don't make sense.
Yeah, the other thing I wanted to mention is that the application period for the Dream for All program is open.
Yes.
It's open, and it's only going to be open for a few weeks. So if you're
March 16th,
March 16th is the deadline, but sometimes the portal will shut down just because everybody's waiting till the last minute and the lenders are trying to upload the applications and get registered and everything. So you do not want to wait until the last week to get your package in. So you do want to start now if you haven't already. So you can see the application date opened up on the 24th, and we're already in the ending of February. So you definitely want to get with your lender, get with Shannon, and get your application submitted so that you can have a chance to get a voucher. And we'd love to help you with that process. So give us a call if you're ready. It's a good time to start.
Yep. I already got 4 in. And they're rolling. So I have a lot of people that are interested that are getting approved right now. So Patricia's right, get in now because it's only increasing from here. So if you already have your application in, you already have it submitted, you got that email saying that it's confirmed, you're good. You don't have to worry. But if you weren't at the last minute, now again, it's not first come, first serve this time. Thankfully, it's a lottery system. So it's not like you have to get in yesterday, but you kind of got to, you do want to get in as soon as possible. Yeah. No, yeah.
Because it's going to shut down and the system is not necessarily up all the time and it's going to get hit.
And guess what?
Heavier towards the end.
This is a lottery system. So what I'm telling my clients is, look, this is truly a roll of the dice. And this is the true lottery because how many people applied last time versus how many people got it? Those are lottery numbers, lottery statistics. So I always say have a backup, which is the CalHFA regular My Home program. They're not going to give you 20%, but they're only going to give you 3.5%. So try to shop based on that qualification. And then if by that time, by March, April, you don't see that house and you happen to win the lottery, you're already ready to go and you qualify for even more. So, don't bank on it. I wouldn't just say, hey, this is our end all be all plan, but put your name in the hat. And also too, as a backup, have the other CalHFA. It's called My Home program. They give you 3.5% down and they're not going to ask you for the 20% shared appreciation. They're just going to want what they help you invest initially with a little bit of interest. And that's it, whatever that 3.5% is.
And so just to highlight the program, you basically are getting like a 20% down payment from the state, but you pay it back and you pay it back in addition, whatever percentage you take, let's say 20% appreciation. So if you buy a house and make, $100,000 theoretically and had 20% down payment, $20,000 go back to the state and you would only profit $80,000. But keep in mind, if you're only getting the house because of that, that's a really good deal. So I would just
Yeah.
say it is like winning the lottery. You're going to, you're going to win a lottery ticket if you get in on this. And people who are on the edge can only, I would even say if you can only afford to buy with this, you might as well. You probably have a 1 in 10 or 1 in 20 chance to win the lottery that could be worth $100,000 easily.
That's right.
Both clients that I did this with would not have gotten a house otherwise. I should say that. So it truly does make a difference. I mean, 20% down, that means you only have to qualify for the 80%. Right. And
It's
so
fantastic program.
that's, again, yeah, it's great. It's great. But the thing is you have to be a first time home buyer, and your parents, or one of the applicants, has to be a first generation home buyer, meaning that your parents cannot have owned a home. So, yeah, just an FYI on that. But yeah, it's a great program. Definitely try to apply as soon as you can. And again, but have it as a backup, the My Home program, in case you don't get to this one. The My Home program is going to be there forever. But I have a feeling that Cal Alpha Dream for All is coming back, especially if they're making money on these things, because they're getting 20% of their equity. So once those funds start replenishing, then they're going to just start giving it back out. That's at least one of the reps that Cal Alpha told me, is that theoretically, if they get it back, they'll replenish it. That's why they're doing this the second time again. So
right.
Let's see what the state does. But
yeah, and there's a limited
if affordability is good. Yes.
So it's for about 2,000 vouchers. So that's why you don't want to wait, because if you think about it,
up to 150,000.
Right, those vouchers are going to go quick.
So 20% down up to 150 means that you can get a house at 750. You borrow 600,000, and you get a 150 down payment from the state. And of course, you have to be in that price range to make that work. I imagine you can get $1 million house. You just get a smaller amount. You can get $1 million house and get 150, be a smaller percentage.
Yeah, it's a little tricky because you have to qualify for the 80%, and you still have to be under income guidelines. So it's a little tricky.
Man, it's like flying an airplane underneath a. It's like flying an airplane underneath a bridge. You can't make too much, can't make too little.
It is a puzzle. It is a for sure puzzle. And like I said, the ones I've done is like in the IE, but I did get one guy that got in Orange County. He did, but it was a condo. But still, at any rate, still got something really nice that he would have gotten otherwise. Aliso Viejo, I think it was. So you got a condo in Aliso Viejo for the condo.
Once you get the approval, then you shop with it. I mean, you have a certain amount of time with which to shop it.
So you have, last time ours was 3 months. You had 3 months to be in escrow. You have to be in escrow in 3 months. Now there is a one-time, they were allowing one-time extensions for another 2 to 3 months. Just in case, like my situation, we fell out of escrow on month 2. So we had to then apply for our extension. They gave us the extension for another 3 months, and then we were in escrow before then. Because once you're in escrow, we have to submit on our end. We have to submit for those funds and reserve them with Cal Alpha. And
I think that's
we reserved it.
And Shannon, is how the funds get reserved to secure the voucher for the buyer.
Yes. So you get your voucher. Hey, congratulations, you're one of the people that get selected. And then there is an expiration date on that voucher. That expiration date does not mean you need to close. You just need to have opened escrow already, because once you open escrow on our side, we can reserve those funds with Cal Alpha, and it's locked in until you close. But if you expire that, if you're past the expiration date, then it's going to go to someone else.
For condos, is it FHA approval standards to get the loan?
Yeah, it has to be warrantable. It has to be a warrantable condo at FHA. I mean, no, this is conventional. This is a conventional loan. This is a conventional loan. It still goes based on Fannie Mae and Freddie Mac guidelines. So it has to be approved with them. There is a HUD website that you can go to see if the property is warrantable, but it's conventional. This is a conventional program. It's not an FHA program. The 80% is with a conventional loan. But the good thing is you don't have any MI because you're putting down 20%. Now, if you had I had a client that put 15% down and 5% went to closing costs, then you do have a little bit of MI there. So, which is mortgage insurance for those of you that don't know.
So interesting. I know somebody who's just kind of really upset yesterday to talk to me about how they can't afford to buy a house in our neighborhood. It's so expensive, and they really wouldn't buy a condo. I'm thinking, you know what? Maybe they should buy, if they get this, just buy a condo, And they're renting where they are now. Why not just live into a condo that you own? Like I said, it is like winning the lottery. You're going to get 20% down. You're going to get a conventional loan, afford to buy more than you otherwise could. The amount that you're buying is all appreciating. Yes, you don't get depreciation on the 20%, but you get depreciation on the 80 that you're borrowing. So it's how could you lose unless housing prices go down? But I don't see that here in California. There's not in LA. We don't have
even
housing
prices go down. If housing prices go down, you have a 20% buffer that you didn't put in. There's one. And also too, with this program, what I found out was agents really took it seriously because they saw that expiration date on the voucher. Because with the loan approval, I put the loan approval with the voucher because obviously they don't have the 20% down. But I say, hey, here's the voucher, here's the credit score, here's to you. And they took it very seriously because they knew that we were on the clock. So they said, hey, I know you need to close. So I don't need to put my foot on your neck. CalHafa's going to do the job for me. And I said, yeah, that's true. I didn't think of it that way. So, if you do get approved for it, it doesn't mean, and who knows, as these interest rates go down, how much the competition is going to heat up. But being CalHafa, it didn't really hurt us as much. It actually, since agents knew about the program, they saw the expiration on it. They know, hey, California is good for it. It's just, hey, can you qualify for the 80%? And, we were able to do so.
Right.
Nice.
But yeah, definitely apply as soon as possible. You have now until the March 16th. One of the things is you do need an approval letter from a loan officer. They need to fill out a form that you pretty much put our name and license number saying that, hey, we vouch that this person can qualify for that 80% and go from there. Now, here's another thing too. From here to there, make sure your credit's good. One of the first client that I got, she didn't expect to get this voucher because I did set expectation. It's a lottery. So, okay, no problem. Let's do it. And her FICO score dropped. So we had to do 1 month. It was just credit repair. One of the 3 months was just purely credit repair. And it actually took a little longer than that. And then we had another 45 days to look for a house. So if you're trying to get that program, please make sure you keep everything in good standing because it's just a nightmare.
So
trying to get everything. Yeah.
Always pay your bills. Paying your bills is always better than not paying your bills.
Yes, unfortunately, we do have to remind people of that. But yes, that's step one. Pay your bills, get your credit right. Because again, if you're still having trouble with what you have now, imagine having a mortgage and a house and things like that. I've been in those situations. And I don't know if maybe you guys can talk about this, but are some people not fit to buy a house yet? Because sometimes financially I look and I sometimes say, well, maybe you should wait and save or do this. I know as a lender we should always push, but I'm like thinking as people financially, I'm like, man, maybe you should hold off on buying a house if you can't afford a lot of the things that you have on your plate now. But maybe that's another conversation. But
Well, if we have a conversation, Shannon's available. I think we went a little long here because we're pretty excited about this topic. Shannon, if someone get a hold of you, talk about CalHafa or anything else, what's the best way to do that?
Yeah, my phone number is 661-317-8484. I'm posting rates daily. My assistant's helping me on Fun with Shannon. So if you look at my stories, you'll see where our rates are at today. And also we have a video on CalHafa on there as well. And yeah, so reach out to me either on my phone number or Instagram. We can definitely get you going right away.
Fantastic. And Patricia, if someone get a hold of you, what's the best way?
My cell phone, 323-365-9909.
Fantastic. I'm at Bill Gross Probate on social media if I can help in any way. We do this every week. New episode drops every Friday. If we can help, put a comment if you like this, don't like this. Tell us what you want us to talk about, what you didn't like about it, what you like about it. If it's me especially, I like the positive feedback. This is the Homebuyer Seminar. Thank you so much. As always, make today your best day ever. Thanks so much.
Thank you.